Good afternoon and welcome to Pistach's Asian Midday Market Watch. Our guest today is Charu Chanana, market strategist from Saxo Markets, Singapore. Now, Charu, is always great to have you on the show.
Hi, Brian. I was also looking forward to it.
Yes, it's Tuesday, the 30th of May. But before we get your insights, let's take a look and see how regional markets have performed in the first half of the day. But before that, we're going to start with crypto markets. Bitcoin is at 27,774. It's down 0.56%. Ethereum is at 1,897. It's down 0.06%. Now, looking across to regional stock markets, we start where you're at, Charu. The Straits Times Index is up 0.09%. Bursa Malaysia is down 0.4%. Shanghai is down 0.77%. The ASX All Ordinaries is down 0.04%. The Nikkei is up marginally at 0.34%. The Hang Seng is down 0.8%. And rounding up the numbers, we've got the Kospi, which is up 0.94%. Now, Charu, your views on market performance in the first half of the day.
Yeah, Brian. So, of course, overnight we did not get much of an action because US and most of European markets were closed for Memorial Day. So, I think the sentiment in Asia today is a little bit more tilted towards what's happening in China and China markets, where we did see, some more sell-offs as well. So, that's keeping, I think, a little bit of a check on the risk-on sentiment right now. But as always, I think we talk about this every Tuesday that we continue to see that outperformance from Japanese and equities. So, I think that's something investors should really take away from this daily performance chart as well.
Now, Charu, one of the things, and I have to talk about it, we've done a debt ceiling deal. What are the next steps and what have been the implications in terms of equities and the dollar?
So yeah, I mean, we've got a deal to start with, which is great because that cloud that was hanging over the markets about a US default has probably gone away for now. But of course, the next steps are very important. I think the first thing would be that the bill has to pass in the House on Wednesday. And then after that, it goes to the Senate, which could potentially linger into the weekend as well. And then remember that the X date, as Janet Yellen, the Treasury Department, has been saying now, is 5th of June, which is the coming Monday. So if we don't see progress on the bill making it through the Congress by then, there is still a risk that we could see volatility spike up. There's still a risk of a US default. There's still a risk that US may not be able to pay its bills on June 5th. So I think that's something that markets will come to realize in some time. So we continue to see whether we get a lot of opposition on the bill from some of the key lawmakers. I think that will be really important to monitor over the course of this week and into the weekend.
Now, Charu, then in terms of the equities and the dollar, what is your take on this impact moving forward? Because there's a lot of moving parts that are impacted by the debt ceiling. So the debt ceiling will squeeze liquidity out of the market. We also have this backdrop of the banking sector in the US that basically, especially in the mid-sized banks, and so you're going to have credit tightening. How is this all going to impact us in Asia? We have also then macro conditions around, and what I like to use, the canary in the coal mine economies like Singapore and Germany. They are showing deteriorating performance in terms of their trade figures. How does this all look like through your lens?
So yeah, I mean, I think the first part of your question about debt ceiling and how that moves the market. So we certainly got the deal over the weekend, but I think some of it has probably been priced into the markets on Friday itself, when there was this anticipation that the deal is in the works and we will get a 2-year postponement of that debt ceiling. So I think there is still scope for some risk on as markets open today after the weekend, because again Monday was a holiday in the US. But of course, like you said, the risks are certainly something that we need to watch. And as we discussed earlier, we also need to continue to see how the bill really progresses through the White House and through the Senate. So while that happens, like I said, there could be a lot more volatility. But once it goes through it is when the markets start to focus on what's next. And that's obviously what you already hinted at, that a lot of liquidity will be sucked out of the markets because the Treasury has to issue bonds to replenish its cash reserves. So, of course, that's going to be quite massive, up to about even $1 trillion if you also club in the quantitative tightening that the Fed is already doing every month. So that's going to impact the markets, I think, in some way. Well, at the same time, like you said, yes, Germany is giving us some warning signals, and Singapore as well. So certainly looks like the manufacturing side of things is not picking up, and the services side of the global economy is also slowing down from a post-COVID reopening boom that it has already seen, and we are not getting the impetus that we would have expected from China's reopening as well. So all that does mean that there are a lot of macro headwinds, and at the same time, equities in the US have obviously been trading in a range to at least higher. They haven't seen the kind of pressure, so the valuation of the S&P 500 currently is still above its long-term average. So the valuations are still stretched. So there is a lot of room for that pressure to seep into the US equity markets.
Now, final question. And speaking of the tech sector, we can't talk about the tech sector without talking about the impact that the whole hype around AI is happening, that is taking place right now, and it's impacting stocks like Nvidia. What are your thoughts on this, and what is Saxo seeing in terms of trading among your clients?
So certainly, I mean, I think AI is really the talk of the town right now. Be it the tech sector or anything. I mean, everybody wants to kind of get an exposure to that theme. But also, I think I'm seeing this increasing concern in our clients, or generally the investors that we usually talk with, about how to really get positioned for it, because there's no one way to kind of just buy an ETF and you get exposure to AI themes. Certainly, that's an option, but there are a lot of different ways to get exposure, and it's just so early in the cycle that you don't know which is going to click better than the other. So I think it is obviously, as you mentioned, the hype has really built up quite far. So as much as we want to kind of talk about how to position for it, we should also talk about the risks, and that being obviously that the valuations for something like Nvidia and some of the other companies are already looking stretched at the moment. So will they be able to provide the long-term returns that investors are looking for? And some of the ways that I've been talking to clients about on how to get exposure to that theme. So certainly semiconductor stocks, like you mentioned, Nvidia, but also ASML, AMD. These are the ones that manufacture the chips that are going into that development of AI. So certainly these are like the shovels in a gold rush. So even as many companies continue to try out building AI capabilities into their softwares, into their applications, the demand for chips from Nvidia and these other semiconductor manufacturers will certainly continue to rise, whether those applications become a success or not. So certainly that's a very interesting angle to kind of get positioned for. But again, we have to keep in mind the risk that the valuations are already stretched. The other way is to look at software companies. Big tech, Google and Microsoft are obviously at the forefront as well for making applications based on this generative AI. So I think those are certainly some interesting names. Google has very large investments in its AI research. So even though it was late to come up with its, Bard, which was a rival to ChatGPT, but I think the investments that Google has put in over the last several years have been a lot more than what probably Microsoft or the other players have done. And then we can also look at applications-based companies like, Adobe or Salesforce, which manufactures the customer relationship management software. So where can we see those AI tools being used in real life in your day-to-day applications that you're using? That can also be a great way to get positioned for this big change that is potentially coming our way.
Charu, as always, thank you very much for your insights. I learned quite a bit, especially in the last bit. Thanks for coming on the show.
Thank you, Brian. It was a pleasure.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.